I think a lot about how to communicate a company's financial goals to non-finance people. Because if I don't, I frequently lose the room. And if I do it too much, they will eventually start to hate what I'm saying. Trust me, I know. If you want alignment at a larger organization, you have to translate for a broader audience. And in this video, I want to show you how I do that with the balance sheet. I like to use this diagram to explain why a fortress-like balance sheet is so important. On the x-axis down at the bottom, you have ability. This is the company's capacity to take risk. And on the y-axis, you have willingness. This is the attitude towards taking risk. And I don't mean attitude. I mean, are you willing to take losses if the investment doesn't work out? This is more about risk tolerance. Now, as the finance guy in the room, you'll build a three-statement model to show how changes impact a company's ability. In other words, put more cash on the balance sheet. And what I like to point out is that if you're not building cash and you have limited liquidity, you're stuck with this option, protective. This is survival mode. You're just trying not to lose. I like to think of it as being stuck playing scared defense because you don't have the ability to absorb loss. If you have a massive costly operational issue, a lawsuit or a massive product recall, or anything else goes wrong, you don't have the cash to deal with it calmly, or perhaps at all. And that also makes investing for growth dangerous because if the investment fails, you're even worse off than you already were. In other words, it's reckless. You want to swing big, but you don't have the cash to absorb a miss. But if you take action to build cash flow, now it's a choice to play offense or defense. If anything goes wrong, you have the cash to deal with it. And if you see an opportunity to invest, you can capitalize on it. And eventually something will go wrong for everyone, like a recession. And if your balance sheet can withstand it, that's the best time to play offense. That's when your opportunity set goes from good to great. Companies can grow fastest when their competition can't. And that's why it's so powerful to always have a fortress-like balance sheet. To sum it up, the quality of your balance sheet determines whether or not risk is a threat or an opportunity to the organization. You can learn more about financial statements in the three-statement model at actionable.com. All right, team. Thanks for watching.